traders, Gary Wagner with WFGForex.com, your daily market update for gold. It is the 19th day of August. It is Thursday, and this is the daily report. Forex gold currently trading at 1231.34, and COMEX gold basis December at 1233.40. Interesting day brewing in the market. We did get an extreme rally and push the market, at least basis the Forex, up about 1237. Actually, when we take a look at our high action, at 1237.20. Our low has been 1227. So we've had a pretty strong range. And in terms of the price action itself, we do have it forming another small-bodied candle today. I find it very interesting because, as you know, my belief is that we are getting close or at the top of this impulse wave B in a corrective phase. It has been a very difficult moment for me to weather because we have had such an extreme rally, and the market, which in a B wave will typically only last 50% or 60%, far exceeded that. But as it has backed off at this point, my sentiment is that we still could be looking at a potential top in the market. Traders, you realize overall, fundamentally, I'm extremely bullish on the market. I'm looking for the market to move past 1265, and I'm looking for it actually to trade and try to test 1300. But as I've said, I do believe before we go and test those contract and historical highs, we're going to need to weather this one last correction. Traders, I now want to take a more compressed look at the market. So what we are looking at currently is a 120-minute Forex chart. And what I'm noticing is this. When we take a look at the activity here, which is that high we hit at 1227, we had a star-like candle. The market traded in a very, very tight and narrow trading band right in here. It then broke out above this long white candle, and then we had basically a star formation because of this small body, gap above it, and of course in the Forex, because the market is a continuous market, this close will equal this open. So they're not true gaps. And then we get this engulfing bearish. This last candle here is our confirmation. So that on a 2-hour chart or on a shorter term chart, you absolutely get a sell right in here. And it could be, and I underline the word could because we're going to have to see how this plays out, but it could be, in fact, signaling a top to that B wave. Traders, as you can see, the market is trading and it is active. It's just broke below 1231, currently trading at 1230.75. And you can also see, this again is that 2-hour chart, that on the 2-hour chart, this engulfing bearish that we have received is really beginning to form a strong confirmation. What we would want to see on something like this, of course, is continuation and candles over the next 2 hours that continued lower. It looks something like this. This, of course, I've just drawn it in, but this would be how a confirming candle would look. And if we saw carry through, again, it would look something like this on our 2-hour chart. When we go back to our daily chart, of course, it would look a little bit different. On a daily chart, this, of course, because we had this extreme high, we're still showing on a daily candle that this market is red, meaning the open and close, the close is higher. So that as that range tightens, this would become more and more of a pure doji. What I would look for in this to signal our sell is going to be confirmation. And again, confirmation, because we've had so many occasions where we've seen this doji-like candle only be kind of profit-taking or breathing room, such as in here and in here, I'm certainly not going to look to go short this market just yet, because what I would need to see is on a closing basis, this candle would have to close in this area or lower. Second, the other thing I would have to see would be follow through. Follow through again would be a black candle. It would look something like this. And that would signal a sell signal basis our candlesticks, because then we would again have a three-river star in the evening position, a three-river evening star variation. And I would look for something like that. It's obviously much too early to tell, but we are seeing some resistance up in this area, and we're just going to have to see how the market plays out. Okay, traders, let's take it one step further. Making the assumption, and it's a very large one, that this does turn out to be our top and we go into our last corrective C wave. At this point, and it might be because of my fundamentally bullish bias, I think that we're going to not have a very, very sharp correction here. We might see activity something like this. We might see the market move higher as it has. If this in fact becomes our top, I've added our Fibonacci areas of our B wave, and if it moved to, let's say, a 50% correction, that would take us right to around 1200 and a 61 to about 1187. So assuming, and it's a big assumption of course, that we do issue a sell signal, in terms of the wave itself, of course, we'll trail our stop, so if the market does continue lower, we'll hope to catch as much of the move as we can. And it is early to tell because we haven't gotten a sell signal. But if, in fact, we do, I would look in terms of a target area somewhere around 1200. I think that that's psychologically such a strong number that if we do retrace, you know, it would maybe only be a $40 retracement or a $50 retracement, 40, 50, maximum 60. I would look for the market to trade no lower than 1187. Again, that's making a lot of assumptions, because the first assumption we're making is that the market in fact will stall at this point and go into a corrective phase. The final corrective wave, that's C wave. We'll see what happens. We've got tomorrow's trading activity and then, of course, the long weekend. And we'll see just where this market wants to go. This has been Gary Wagner with WFGForex.com, wishing you, as always, good trading. We'll talk to you tomorrow for the weekend review. Bye-bye.